Good morning, everybody. Welcome to the Flow Show, Tuesday, the 18th of November. And got a few things going on, a few strange things going on in the market and a few not so strange things. We're starting to get US data dribbling through, various bits and bobs dropping. So we'll cover all of that through the show today. Good morning, Mr. K.
Morning, Ryan. Morning, everybody. Yep, we are starting to see random numbers drop. That's going to make things a bit more interesting.
Yeah, absolutely. Play the guessing game over what data's dropping next. Right, we'll get over that shortly. Right, let's get cracking in what's going on. Over in China, this Taiwan, Japan stuff is picking up a bit. It's still within sort of bum fight territory, shall we say, but there's more and more headlines coming about this. China yesterday warning the US against arming Taiwan, vows to defend its sovereignty. So they really have got to be in their bonnet about this at the moment. There was a meeting today between Japanese and China's senior diplomats in Beijing, where comments out from the foreign ministry in China saying on these tensions that the Japan side must immediately retract its wrongful remarks. That prompted a response from Chief Cabinet Secretary Kihara saying Takaichi's remarks are in line with our long-standing views. So seems no one's going to give in from either side. I don't think it's going to come to anything, but you never know with China. They could start putting in controls against things in Japan, and they've already told tourists not to bother going there. So it could snowball into something from nothing, but let's see how it goes. Finance Minister Katayama has got a bit hot in the seat. Speaking about FX, she says she's watching FX moves with a high sense of urgency. She says she's aware of reports that the government fiscal stance is affecting markets, but is deeply concerned about recent FX moves and seeing one-sided moves in the FX market. I wonder if she's watching a 1 minute chart like a lot of our Yank friends. She spoke about the economic package, saying that the upcoming package has been big in size, but we still cannot tell the overall size of the package for now. So they're keeping close-lipped over how much it's going to be. The yen has broken up above 155 now. Not exactly motoring, but it looks like it might be on a bit of a grind. There's been further pressure in gilt yields, JGB bond yields. We're seeing these reflecting the fiscal position, shall we say, or the market's anticipation of the fiscal position. These yields are really pumping at the moment. Kay, is it more a case that we could get something in bonds more than FX, and because doing something in bonds would in effect maybe help with FX?
Well, both are a bit linked because I think the yen is remaining under pressure mainly due to this fiscal plan. We also heard that panel or those advisors coming up with a even bigger package now, 25 trillion yen, right? That's the new number overnight, and it can only go up from here, it seems. But yeah, because if you look at the yen moves overnight, it was very interesting because usually you see a bigger correlation between the yen and the Nikkei, and the Nikkei dropped. Well, so far we are nearly at we are above 4% drop, and usually that should put support under the yen. Also, looking at commodities, they are a bit lower. Equity markets dropping, all of that should be supportive for the yen. Katayama as well, keeping the intervention threat at a high level, and yet the yen doesn't really follow any of its usual correlation. So the market is really looking at this fiscal package, and yeah, the yen is remaining under the cushion. I must say that even though I'm still a little long dollar yen because it's just going. or continuing to push higher. I'm always very careful now with my stops, because if this little game continues, there may at some point Katayama and the MOF could become a little bit irritated and step into the market perhaps, but we never know when that would happen. Are they waiting for the US data to drop? Imagine that we have a bit of a negative NFP and the dollar yen only drops like 50-60 points and then starts to rally again. They may be dragged into the frame. Also, I've been thinking, and I posted that in our room and on Twitter yesterday. Let's not forget that Bank of Japan, in their statements and what they usually do, they always stand ready to step in markets and meet the JGB market when things get a little bit out of hand. We are now trading at let's call it record levels since the past 30 or so years. They may be dragged into the frame as well. So we can't really rule much out right now, because if the Bank of Japan would step in to buy unscheduled JGBs, that in turn would put more pressure on the yen. So yeah, it's a bit of a what's going to stop this if the lower Nikkei doesn't, if Katayama doesn't, what is really going to stop this yen decline, right? And we may coming to a time, a space in time where they don't see any other option than to intervene effectively.
Yeah, very much so. So the pressure remains, and yeah, I'm favouring sitting on my hands in the yen for now. I don't want to get into something and wake up and find I'm wearing it around the neck. So yeah, it's going to be a good watch what this yen does, particularly above this 155, and how fast it accelerates. Because we still haven't really got the volatility. She says about the old line rapid moves. Is there anything rapid about this at the moment? Yeah, we had a bit of a pop through, but it's not exactly steaming away, is it, Kay?
She's more putting the emphasis on the one-sided thing, side of things, right? So we still don't know how, if they are going to keep the same playbook as the prior MOFs heads. We still don't know, right? That's actually maybe slowing down this move a little bit, because we don't know. I mean, if it would be the old playbook or the former playbook, we're still a notch or even two away from actual intervention. But then they can surprise us, right? And just go and just go and intervene whenever they like. They can do it whenever they please anyway. So I mean,
Yeah.
but it's an interesting wait for them to see up to where they will let it go, or will they come in earlier. As I said, I mean, for such a plan, if they want to discourage the speculators, they should come in earlier rather than later when they are fighting against the whole market.
Yeah, exactly. And Eddie asked, the last intervention took place around the 160 level. Does that have any precedence in terms of level? No, they do not look at FX levels. They look at their yen index. They look at the speed. They look at the speculation. They look at several factors because they intervened after that as well. I think, was it twice or three times in July in the end? Can't recall. I think it was twice.
Yeah, twice, and then once well before, right?
Yeah. So it's not the level. So people will speculate a number, Addy, because that's what the press want to do. They need a bit of clickbait, so they will say, and 155 has been touted as a level as well. We've spoken about the 155. It's how fast it goes through the level. It hasn't gone 155, 156, 157 in a blink. So yeah, the volatility isn't there as far as that tick box is concerned. But as we've been saying, this is a different government, a different finance minister. She may have other ideas of what's rapid in her sense. But yeah, as for exact levels, it's speculation, mate. Speculation. Right, moving on to Ueda, who had a meeting with Takaichi. Again, this is one of those things that's being pumped around the press, but it's standard fare for what goes on in Japan. Ueda's always up in Parliament. He's always talking to the PM and whoever. Anyway, he said they talked about the economy, inflation, and monetary policy. He told the PM they are adjusting the degree of monetary policy to support inflation to stably achieve the 2% target. He says Takaichi didn't have any particular request, and he also agreed that it's desirable for FX to move stably and reflecting the fundamentals. So standard lines from that. Bank of England's man coming out very hawkish. Says firms are continuing to factor inflation into pricing. Says underlying inflation dynamics show an upside risk. Says firms are more attentive to upside risks to inflation. Says the current environment shows upwards CPI bias, and says shocks give upward bias to inflation, and central banks will have to lean against upward bias to inflation. Kay, she's going to vote for a 50 pip hike at the next meeting, isn't
she? Well, let's assume not, but who knows? Who knows in this era? Yeah, she's clearly one of the. Is she one of the? I don't know. We've got Pill as well, who might fight against the cut.
Yeah.
Yeah, I mean, they all have their own opinions, but will it matter in the end?
No, exactly. Yeah, she's got another term there as well. So yeah, definitely won't be voting for a cut at the next meeting. Most definitely. Right, moving on, and while we're in the UK, Reeves, she's turning so many 180s, she's going to fall over dizzy in a minute. She was going to raise bank taxes, or that was one of the plans floated early on in all this budget mess, which she then sort of knocked back, and now that's back on the table again. The press and the market getting really cheesed off with her at the moment, putting all these about turns. So that's the next thing that is on the table, hitting banks' profits with a higher tax level, which, as I say, hasn't gone down too well. In a poll run by the Times, or reported by the Times, that nearly half of Labour voters want Starmer to step down. So he's getting it in the neck from his own mob as well. So again, more bad news. If this budget goes down like, I'll say like Truss's budget or announcements back then in 2022, if the market throws a little bit of a paddy, it's going to put both Reeves and Starmer in a bit of hot water. This is why this budget is going to be really important for the quid on so many levels. Moving on to the ECB, one clown show to another. ECB's McClough says that they are in a good place at the moment. He says it's an exaggeration to say he's worried about the price trajectory. ECB Slipen says risks around inflation are balanced and policy is in a good place. A bit of data that we got yesterday, Canada CPI data coming in a little bit mixed, some numbers in line. CPI came in softer, but not as soft as was expected. Headline number expected to come in at 2.1, came in at 2.2, but that was down from the 2.4 prior. Some of the core measures dropped a little bit, as you can see there, the trimmed and medium, but the common stayed unchanged. Also, the core number, Bank of Canada's core number, went up to 2.9%. Kay, not really anything there that will get the BOC moving one way or another, but it should at least keep them sitting on their hands for a bit.
Yeah, a bit of a mixed bag. Yeah, hand sitting. I think those numbers are not going to change what Stephens and Rogers have been saying over the past meeting. They are waiting. I don't know actually if central banks in general are going to look at what's happening in the US jobs market, which could weigh on global financial markets as because I mean you look at the equity markets, for instance. It's a whole sea of red today. So you can see that overall the market is looking at it. But if that is going to influence the Bank of Canada, there's been half good news there, right? Because I think Carney passed his budget. I think they're more going to look at what's happening to the economy from the trade and those budget kind of things than taking a lot of note of this kind of CPI. It's still somewhere. If you look at the headline number, it's somewhere inside there 2 to 3%, and yeah, moving on from that one, I guess.
Yeah, they run their 1 to 3% band for that.
Is it
And
one
yeah,
to three
Carney
or
passed.
is it
Sorry,
one
mate.
to three? 1 to 3 for them, right? Yeah.
Yeah, 1 to 3. Yeah, so
Okay.
they're pretty much in the middle. Yeah, Carney got his budget passed. There was a little bit of risk that there might have been some shenanigans, but that went through no problem. Other data, we had the Empire State Manufacturing number, which came in a decent positive. This one has been a bit up and down, up and down, up and down recently, as you can see there. Can be a bit volatile. In the details, employment stayed pretty flat. It rose to 6.6 from 6.2 previously. Prices paid and received both came down, though paid came down to 49 from 52.4 and prices received 24 from 27.2. So a little bit of inflation easing there in the manufacturing sector. Yeah, we've got construction spending. Don't usually look at this, but why not? It's for August. Way back in the summer, came in at 0.2% versus minus 0.2 expected. So a little bit of catching up on that data. Taking all that data into account and other bits and bobs, the Atlanta Fed GDP now rose to 4.1%, up from 4% in their prior reading early in November. Fed's Jefferson says we need to proceed. We need to proceed slowly as monetary policy approaches neutral rate. Bit of a rehash of comments. Says currently the policy rate is still somewhat restrictive. Still unclear how much government data will be available for the next meeting. Fed's Waller, he's been making a case for continuing rate cuts, which has sort of been his stance for a while now. He says he supports a 0.25 percentage point rate cut at the Fed's next meeting in December. He said the debt rate cut will provide additional insurance on the labour market. He says his worries that restrictive monetary policy is weighing on the economy. He says the US labour market is weak and near stall speed. He says underlying US inflation is close to the 2% target. Inflation expectations are well anchored. He said if we saw a rebound in the jobs market, there would be less need for insurance cuts. Says he's been hearing from firms in his region that more and more are thinking about plans for laying people off. He says the Fed needs a better reason than inflation having been above target for 5 years to not cut rates. As I say, sounds very dovish, but that's been his stance. He hasn't promised to go a rate cut every meeting, but he said that further rate cuts should happen over the coming months. That was way back in his last speeches. We've had economic advisor Hassett out on the wires saying it's time for the Fed to be really data driven. He says there's been mixed signals in the jobs market, but positive signals in the outlook market. He says there could be a little bit of almost quiet time in the labour market. There's a kiss of death if ever you want one. Trump's been speaking on Mexico. That's one of the reasons why we've seen a jump in dollar mex. He says if he asked if he would launch strikes against Mexico to stop drugs, says it's okay with me. Also says I'm not happy with Mexico. Kay, those comments here hit the MEX, but it's talking about this drug stuff rather than trade and anything else. But I think the market thinking any blow up and he might put a you're getting 200% line on them or something.
It's one of his threats, possible threats, right? So the market, has and has reacted and probably needs to react to it as well, because if you get like direct US involvement in Mexico for whatever reason, can't really be good for Scheinbaum and Ebrard, right? So yeah, if it would have been a kind of natural move that is just based on lower equities, whatever, I try to counter this move, but it's all when it's geopolitics or politics driven, it's tough to go and hit that, right? Yeah, I'm just going to leave it for what it is right now. And also, Mexican peso is as it's a carry trade, and carry trades usually are impacted by risk. So there is a bit of a double push under the dollar mix right now for a bit higher, but especially I would say from Trump's administration. Now, that picture that you're showing there, remember we spoke about it, and if you look at the underside and the top side with 1850 in the middle, we are still in that same playbook where if you are in the underside, if you can't break below 1820, it will gravitate towards 1850 again. Now get a move above, we could actually go back up to 75.80 and then do exactly the same again and come back down. It looks like a bit of a symmetry around 1850 right now in the shorter term.
Yeah, absolutely. It's still undecided which side it wants to sit on for any length of
Absolutely.
time, and yeah, keep an eye on it. Yeah, I don't know what to do with this one. I might have had a little nibble at the 1850, but don't know.
Well,
We're seeing commodity currencies like yesterday. Mex got it, Canadian dollar got it, Aussie got it. I don't know what's get. I'm doing a lot. I've got to apologise to people in here and in the chat room. I'm doing a lot of work in the back end regarding our trading analytics launch. So I'm not 100% focused on markets, but it seemed like yesterday people were having a bit of a clear out rather than sort of panic. Dare I say it? Maybe some squaring off starting for year end ahead of
no,
Thanksgiving.
I'd rather say it's ahead of the expected NFP and etc. releases. I think now that is we are still in a market where we are seeing swings, but short-term swings. Now we are just speak about the mix. We're seeing it a bit everywhere. The only really, and we talked about it as well, the stability is the euro dollar, because it's just the what is it, the washing machine where everything goes through, and as a result of it's remaining extremely stable, but the rest is hopping up and down with risk. Then we have the expectations of those NFP numbers, and I think wherever you look, it looks to be that is what we are doing right now. So the bond market didn't have the numbers yet, so that is very stable. But the equity market is maybe a bit afraid of a weak number. The risk market, if you want to put it that way, in FX has also its moments. We've seen, as you say, the Aussie drop, the MEX drop. Canadian has been under the cush for a little bit as well. So I mean, it's all a preparation of those numbers to drop. I would suspect, yes, other years where there's nothing like really out of the ordinary happening, we know that from the 15th of November we are starting to see end of year moves from the bigger companies, asset managers, sovereigns, etc., and you can see a move develop from mid-November. I would suspect that a lot of them are now waiting for those first numbers to drop in the US, and then perhaps engage in whatever they need to do into year end. So we are getting maybe a year end move, which is going to be a bit more concentrated in time with a certain delay.
Yeah, absolutely, and probably more swings to come.
Yeah.
No less. Yeah, I forgot to mention there's the jobless claim numbers that dropped in. They decided they were going to get themselves together. So this is for week ending the 18th of October. 232,000 was a number, which is a bit of a jump from what we'd seen previously. But You know, there's a couple of weeks missing within that. Continuing claims still in that 1.9 million mark, again ticking up. Nothing in there that suggests there's been any massive wobbles while the government's been shut down. At least, you know, we've been in that 200k area for quite some time now. So yeah, that's at numbers there. Right, moving on. Putin envoy Dmitriev says that they won't take part in upcoming Istanbul meetings, though he held productive talks with US's Witkoff in the US in October. That's ticking along. And what does Peter Thiel know that we don't? He apparently sold his entire Nvidia stake in Q3. We get their earnings numbers tomorrow. Maybe he got a little hint of something. Who knows? But there's a little bit of speculation for you anyway.
He's probably had a chat with his mate Barry.
Yeah, they're all in it together. They all know what each other are doing when they have their little
course.
meetings down the gym. Yeah, I'm getting out of this. I'm getting out of that. Okay, give me 10 minutes.
Yeah,
Anyway,
exactly. Let me make a quick phone call.
Yeah, I'll tell you what. If the earnings are really crap tomorrow, or they disappoint the market, then there's going to be a few eyeballs on Mr. Thiel anyway and what he did.
And if they're really good, the market will have a good laugh at them.
Yeah, exactly. I'm sure he's made enough money on them anyway. Right, so I don't even know. We'll have to look see what data we're getting today. I don't think we're getting industrial production today, though we might be. I don't know. I did see. I think I put a note in our chat room a while back saying whether we're going to get it or not.
Is the industrial production produced by the Fed? That's what it says on the calendar, and I can't believe it.
Yeah, I know, and the Fed, and we should get it, but some of the data that they use for it might be from government agencies. Yeah, exactly. This is when it gets a bit still. I can't remember. I put in the news that there was a little calendar about when industrial production was dropping.
We shouldn't get the durables.
I'm just checking back now.
But they haven't moved anything anyway for the past years. So
no. But again, the market's going to be looking at stuff. I'll have to dig it out. I can't remember. This is all becoming a bit of a mess, and I don't know if I can be bothered with it. So keep your eyes on the calendar anyway. If it drops, it drops. If it doesn't, it doesn't. Yeah, let's make it all a big surprise whether this date is going to drop. But anyway, we might get that, or we might not. So keep an eye on that one. We do get a few Fed heads speaking, though, anyway. Right, I think that's it from the news. Anyway, unless you've got anything else, Kay?
Nah, nothing really shocking, right? I thought I saw something, but no, I mean, it's fine. Let's move on, mate. Yeah, we had that Atlanta Fed, but they have like 750 revisions before we get to the final number.
Yeah. I just keep an eye on this dollar yen because it is having a little mooch up to new highs.
Don't jinx it.
I'm not jinxing it. So I might, you might need to keep an eye on this one if it has a little bit of a quick shove up to the next big figure. There's a bit of resistance coming in at 155.90s, just ahead of the figure. Which was an old prior high. Going back, where does it go back to? It's all going to get a bit messy.
I'll be happy to take a profit if we get up to 155.90. That's all good.
Yeah, just in there. We've had a bit of action figure 155.90s. So that's the next level to keep an eye on. If we're blasting through there, I think if I see a move in the next couple of sessions up to 157, I might do a couple of overnight shorts maybe. Just a little chip on to go to bed. It
depends on the speed we're going up there. I just hope the market is not buying on the back of that 4-week average in those claim numbers, because the 4-week average is absolutely useless right now, because they, as you say, they have gaps in the numbers. So if you don't get anything for 3 weeks, obviously your 4-week average is going to drop like a stone.
Yeah, exactly. I don't think they are, well, unless they're doing it directly in dollar yen, because the other dollar pairs aren't really doing an awful lot. Dollar CAD's on its lows, Aussie dollar's on its highs, so yeah, bit of a mixed picture. Looks a bit yen led perhaps going through all that stuff. What to say about euro dollar? Not a lot going on there at the moment. It's edging down. We're back under 116. It can't seem to hold above 116 at the moment, but it's not going massively anywhere quickly. This sort of 115.70s has been a bit of an on-off level. It's not that clear, but it's been a bit of a pivot. We couldn't hold below it for very long. We couldn't stay above it for very long. So just keep an eye on that one, at least in the intraday basis. Not much is happening. That could be a level that holds, but as I say, rallies into 116 aren't holding for very long. And I was keeping an eye on this Aussie Kiwi to see if maybe we got another push up towards these highs, to see if we're going to cement a bit more of a top, but it doesn't look like it's going to do that. This old 38.2 fib, which is the massive one going back 14 odd years, that's been support recently, and we're just tapping it again at the moment. If we break below there and hold below there, we could well be going back into the longer term sideways range, finding a bit of resistance against this, call it a bit of a break point, but it's becoming a bit of a short-term level anyway, up into 114.85s. But this one might be over as far as the rally goes, looking at the price action at the moment. Cover dollar mex, I don't need to go there again. Kay, I'm going to pass it over to you, mate.
Yeah. And let's shake it up a little bit, because we need to look at what happened overnight quickly. Let's see. I like Dimi's comment. As long as we get the dairy auction, that's fine. Yeah, good. So you're completely focused on the Kiwi dollar, Dimi, right? Look, what's happened on this S&P, right? We had a pretty big drop. Yesterday we tried. Yesterday towards the close we tried, but in US time it actually held. It's only in Asia that we really dropped below, but we are back onto this trend line here. So I'd say for what's happening today, keep an eye on where we close, I would say. But again, everything we do right now, in my opinion anyway, is in preparation of. So getting rid of positions, yeah, a bit of nervosity around what may happen on those NFPs coming in, bit of a washout. Peter reading that Peter Thiel is getting out of stuff, Bury short this and that. So the market is getting a bit nervous. So we broke below the trend line that we started to build on from the 1st of August, sorry. But we are back on it. So for the day, it's pretty simple, above or below, I would say. If we stay above, 67.15 is probably where we can reasonably get back to. 67.5, 60 is perhaps not a stretch, but if we get up there, we may just stall up there. Okay. On the downside, there's a bit of interest, I think, around 6,600, but while we are above 6,500, it's still, the longer term is still looking very big. Of course, only under 65 really are the more medium term, longer term players going to get a bit worried. May all happen this week, but I just wanted to show you this support line that started from August, which I've been looking at for quite a while, and we are turning right around it. Okay, and before I move on to the currencies, we have to look at what's happening in gold, because we had a bit of double trend line action here. And also thanks, Michael, for highlighting this one in particular. We stopped like pretty much right on the crossroad of those two trend lines converging. It's also a bit of a support resistance level that we had before. So I think the 4,000 is pretty important. Unfortunately, when I walked in this morning, we were already trading up around 40 and a quarter, and I didn't want to pay up. But it does look like 4,000 is going to play a role again in whatever happens in gold. Not going to exclude a move lower, obviously. If you're looking for lower, bear in mind this bigger trend line, and then um, this prior low here around 39 and a quarter, and then this one around 38.80. I think this is really going to be the big zone for the medium term. If ever we come and test this 38.80, 39, 39 and a quarter, this is an area where we will have to pay very, very close attention. But in the meantime, on the day, it did, if you want to look at it from a picture point of view, it did a pretty ideal move down and then a bounce from there. What can happen from here is a bit similar to S&P. Have you noticed that gold and S&P are actually in different speeds, obviously, but they are running a bit together with each other of late. There is a bit of correlation, more correlation between S&P and gold than what's happening on the rest, which is a bit counterintuitive, because if you want to look at the equity markets as a positive negative risk play, gold should actually move the opposite, but they are looking pretty similar right now, I must say. So this is an interesting one. 40, 60, 65, that's the first little level here that we can have a look at, and then obviously the 41, and but I, well, never say never, but I doubt we get back up to what is all this about? Hang on a minute. Oh, I doubt we will really move all the way back up there ahead of the data. Okay, and then silver, also an interesting watch. Could we have a remake of this move where we saw a dip below that middle point 47 and a half, and then rally unfolded? It looks kind of a bit similar to this move, okay? Actually, even similar to this move as well, like quite well, this is a bigger drop, but we had a look under 50, again, Asian time zone, but now we are already above. So we could be doing something similar, okay? So obviously 50 above or below is going to be important, and I would say especially coming out of the US data later this week, okay? Ali, I've seen your euro dollar, but then let me just have a quick look at this again, because if you, whoops, sorry, wasn't. You're saying that you're short in euro dollar, but you're long euro dollar long term. For me, you're either or. I can't personally. I can't do a short term against the long term. I have a view on the one side or the other. But if you want to play it that way, I know some other retailers do the same thing. But I'm not in that vein myself. I really can't. But as Ryan already showed, we are in the range, preparing for those US data, and has to be said, it's a stable one, even though it's trading a little bit lower. Dollar is doing a little bit better, but it's still pretty stable. Okay, and the levels remain relatively the same. I think. 115, 60, 75, and then I would pay a little bit more attention if we get down to 115.40 perhaps. Okay, that could be a bit of a level where we need to look what's happening, because those are the two prior lows that we saw. Top side, it looks kind of blocked. I wanted to show just this one, and I need to zoom in because otherwise it's not very clear. Look at where the 55 and the 100 DMA are. They are both exactly around the same level right up here. And that's also not far from the prior highs that we have here, 55 in the euro dollar, and they both come in just above there. I think the 50s, for those who look at the 50s, it's right there as well. Um, so this level, if the US numbers are bad, is going to be one that I am going to pay very close attention to coming out of the data. Whether we get a test, break, retest and hold, or fail again, this is going to be for me the important level. Okay, you can add 70 because that's the prior high here, but to me, this is going to be the big level in the euro dollar for the rest of the week, actually, if we get back up there. Yeah, silver, I spoke about silver, Hannah, right? It could be doing the same thing as we've done prior around 47.5. Sterling, I don't even want to look at it right now. We are just mooching around. Euro sterling had a quick look below 80, 88, but then already back above. I just want to have a look at this Aussie because this has been quite a funny watch actually. I haven't had much on the Aussie, but on every serious dip in the equity markets, Aussie has been responding again in Asia, but again since the start of November. 64.60 held, 64.60s held, 64.67, 68 held. Quick dip down to 64.65 and it held. This 64.60 is shaping up as an okay level to watch. And whoops, what am I doing here? Rather than really looking at all those lines and stuff, we could actually virtually take all the lines off and just look at what's happening at certain levels. And it reminds me also of what happened in silver at various stages. Even in the $23, I remember the $32. I remember very well as well. Then the 39, and it may not be completely similar in effects because it's two different instruments, but this is telling us that people are waiting there or don't want to be short there, or some people are just waiting there with bits. Okay, so I mean, this to me is an interesting development. Okay, as interesting as was the 64.40, the 64.60 is starting to be quite interesting for me on the Aussie as well. Okay, very neutral, also waiting for the data, and we can look at that with most of the FX currency pairs right now. Just a quick one because, and I think, was it you, Dimi, who came up with that wedge yesterday in our room, and that was really an interesting one as well. And we are tagging it again on the dollar yen. For the rest, I completely agree with Ryan's levels, 590, and then closer up to 157. But we are in a bit of a wedge here. But the main theme here is that we're not giving up anything on the yen crosses. Look at that euro yen. It's just continuing to hover around the top end of the channel. We tagged 180. If we were a darts players, we would be extremely happy. It's just beat, and I think that reflects what the market is thinking about all those fiscalities in Japan, rather than being correlated to what's happening in the Nikkei, for instance. As I said, I mean, on that 4% down Nikkei move, dollar yen should have been stronger. That's and it's not. So that's also something that that is telling, I think. And with that, Ryan, back over to you, mate.
Thanks, mate. Yeah, that yen stuff and the yield stuff, it's pretty much a mirror image of what's happening in the UK. You know, if yields go up because of the budget, the pound ain't going up with it.
Yeah.
It's going the opposite way. So yeah, in the same boat, at the moment.
Yeah, and that's where it's interesting, and what we are doing here on the show as well, Ryan and I, is not specifically looking at like, oh, okay, equities are moving here and that. We look at the reasons behind why is this not correlated to Nikkei, for instance. So now it's clear what it is correlated to. And as Ryan says, it's the same story as we saw in the UK market, and rightfully so. Rightfully so. Maybe one last one. I know but I'm not going to take a
Like Colombo. Just one more thing.
Yeah, just one more. It's Swiss, and we have seen this move here in Euro Swiss, and that's funny in a way because it only very, very shyly reacted to what's happening on the in the equity markets and the risk-off environment. This is that move, and now we're already back higher than where we were before. This to me is comforting me in the idea that the market is not specifically trading those kind of risk correlations, but actually looking at what the trade deal with between the Swiss and the US gave us, which is basically, if you take the investments into the US for granted, which is the big question, of course, when that will happen, or if it will even happen. Although the pharmaceutical companies have already said that they are and will continue to invest in the US. This is a mini version of what happened to the yen after the Japan-US deal signature. And I leave you with that. Over to you, Ryan.
Thank you very much, mate. Wonderful stuff as ever. And we'll call that a session for today. Thank you, everybody, for coming to the Flow Show. As always, trade well, trade safe, and we'll see you bright and breezy tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.